Hi guys, I had this video sent through from a friend of mine, and I've kind of always wanted to start doing like a TikTok fact or fiction. So I thought this one was actually going to be a really good one to start. So this guy here, which I'll cut over to the video in a moment, talks about how if you make an extra dollar repayment onto your mortgage each day, it'll actually erode that compounding interest calculation, meaning that when you make your monthly repayment, you'll actually be paying off all principal because there'll be no interest there. Now, it all depends obviously on the amount your mortgage is and your interest rate and all that sort of stuff. And we always do recommend increasing the frequency of your repayment anyway to erode that interest calculation. But I don't think $1 a day is enough to have an impact. But we'll just cut over to the video now.
Pay an extra $30 and pay $1 per day to your bank, because as you say, as I said earlier, compound interest goes up over the course of the month, and then it goes when you
now
make
the guy
payment,
must know what he's talking about, because look at those screens in the background.
If you make $1
yeah, he's
payment
definitely
per day,
doing some
it goes
rising
up. First day you make a payment, it goes shit, back down
like
to zero.
That.
Make another payment the next day, $1, it goes down to zero.
Okay.
If you do that for 30 days,
so
the end of that
let's
30
actually
days,
work it out. Can we pay off our mortgage in 5 years by paying an extra $1? So what I've got here basically is I've gone through and done a daily loan amortization. Now I'm using a 500k mortgage at 6%, monthly repayments of $4,000, because that's probably where the majority of people are sitting. And so you can see the first day is calculating $82 of interest. So your daily rate obviously is your per annum, which is 6% divided by 365. And then so the next day it compounds that and compounds until the end of the month it gets charged, so $2,554. You made your repayment of $4,000, so you've actually got $1,445 dropping off your interest repayment. And then so the next month you're at $498,554. So if you were to pay weekly, you'll actually pay off more principal as well, because of the way that interest is calculated daily. So how I'll make from TikTok with lots of screens explained it is if you chuck an extra $1 on, it'll actually erode that compound interest calculation. So you can see here instead of 82.19, it's 81.19. And then so we've got the benefit of this compounding. So instead of 164 as your total compounding interest, it's actually only 161.40. And you see a really good saving here. So yeah, we're not eroding all the interest, but we're probably using different examples. But it showed here that we ended up saving $496 in interest. So we've actually paid off a huge chunk more of our principal. And do that over the course of 15 years, you'll probably actually pay off your mortgage. So this was all about TikTok fact or fiction. And so I need to tell you off the bat that it's not actually how they calculate it. So here is the actual example. So every time you put $1 on, it drops your total sum value. So your $500,000 loan, you put $1 on, becomes $499,999. Next day you put $1 on, becomes $499,998. And your compounding is based on those calculations. So it won't rise as fast as our base sample, but 30 days on a month, you'll see here that I think you save 40 cents. Yeah, not even 40 cents. We're saving 8 cents. So not a huge saving there. Obviously, if you're chucking $10 on, it's going to be a bigger saving, but that depends if you got to spare $300. So basically, TikTok, fact or fiction, if you can chuck $1 on your mortgage every day, you'll have your mortgage paid off in 5 years. It's not going to happen. If you do want to pay off your mortgage faster, make sure that you're paying it weekly, because, as I said, interest is compounding daily, so we want to knock that down as quick as possible. And just make a little bit of an extra repayment. Like even an extra $5 a week on top of your weekly is going to have a huge impact on paying down your mortgage quicker. And that's it.